What's really going on, guys? Ramon Sanchez here.
And this is Matt Sanchez. Hey, welcome back to the channel, Living in the Heart of Southern California. We're so excited to help you guys today with our new video today. And in today's topic, we're talking about 7 steps to buying your first home.
That's correct. In my 34 years, people have always asked me, what does it take in the market to buy real estate? And so, you know, what we want to do here is we want to bring you guys value. We want to bring you these videos. We're changing it up a little bit as a father and son team. You know, Matthew has joined it 7 years now, right?
Yeah.
7 years already. Yep. Wow, time is flying. And his wife just got her real estate.
Yes, she did. Yeah.
Boom. So the team is growing, guys, but we want to bring these videos just to give you guys value, to show you what does it take right now in this market. The market keeps going up, it keeps going down, it's all over the place. And so we want to give you guys some golden nuggets, and we're talking about 7 golden nuggets.
Yep.
7 steps. That's
yeah.
right. We're talking about that.
We're going to talk about 7 steps, like I said, from buying your first home, all the way from starting off with no knowledge, all the way to getting the keys to your new home. And if you stick around to the end, we're going to give you a golden nugget that a lot of buyers ask us, some questions that we've seen, our experience, that sometimes buyers think is a good thing, but it's actually detrimental. So stick around to the end, because this is going to be a good golden nugget for you to know when you're purchasing your own home. So welcome back to the channel again. It's Living at the Heart of SoCal. And hey, we help a lot of first-time home buyers, sellers purchase their own property, sell their own property. And if you're looking to buy a home in the next 30 days or even 90 days, give us a call. All of our information is down below. You can even comment down below. Let us know. We see every comment. We see every message. We answer our phones. That's something rare. We actually get a lot of people tell us, oh my gosh, you actually answered your phone. So give us a call, give us a ring, book an appointment with us. It's all in the description down below.
And if you haven't subscribed to the channel, please do so. Hit the notifications, right? Hit the like buttons, help us out, because we're growing the channel and we just want to help more people. That's all we want to do.
Yes. So step number 1 is obviously partner with a real estate professional. Like myself, like my dad, we're licensed real estate professionals. We can help you get access to homes in the market. We have local insight and we know the neighborhood to help you, kind of guide you in the right direction to getting your offer accepted, all that stuff, all that good stuff.
So how does that look like, partnering up with an agent?
Yeah, so the first thing you'll want to do is you want to interview a couple of agents. And then you'll start to find out that there is a big difference from agents and the brokerages. You know, most buyers and sellers know that, hey, the brokerage is not what's going to help you. It's the individual agent that is going to help you, and the activities that they do to help you secure the deal, to help you find that right home and get you started in the market.
It's always good to interview a couple of agents, 2 or 3 agents, sit down with them, have them give you a buyer presentation. We always want to start with who is going to be the agent, going to represent you, who's going to help you out, what is the experience that they're going to bring to the table, how strong are they at the negotiation. Believe it or not, it's very important, the negotiation part. Okay, so look people up. You know, you can look us up. You can find us online. Look exactly how many 5-star reviews that we have, not just on one platform, because we see people that go up there and look for an agent, and they might go on Yelp, they might go on Zillow, they might go on Google. So make sure that you look at all platforms and take a look at what they're having to service as far as the reviews that they have and what are the clients saying about that service that they're providing.
Yeah, absolutely. I totally agree. Check the reviews. And one thing that a lot of buyers don't know is you could check the Zillow and homes.com. This is actually linked to their license. If an agent is not on this platform, most likely they don't have any sales. So they don't want anyone finding out that they have 0 sales in the last year. So check these listings. You'll be able to see how many homes they've sold in the last year. If they're not even on Zillow, hey, maybe that's a red flag. But you know, just things to think about, because ultimately experience is what's going to help you in the market. And ultimately someone who knows what they're doing, has the numbers to back it up, the quantity, the experience, all that good stuff.
Yeah, 100%. Because we do get a lot of people that come and they look for us, or at least when they come in, we make an appointment. We have them come into the office, give them a buyer presentation. And then once we took a look at the buyer presentation, they're like, wow, the other agent didn't even give us a presentation.
Yep.
So it's very important that they actually sit down with you and go through the buyer presentation in detail detail, you know, what does it take to be a listing agent? What does it take to be a buyer's agent? The beautiful thing about us is that I'm a listing agent and he's the buyer's agent.
Yeah.
When you're looking to buy a house, there's different roles in the real estate industry. What I consider myself a listing agent is that sellers are constantly hiring me to put their homes on the market. What does a buyer's agent look like? That's the role. His specialty is
helping you find the off-market deals, helping you get the home that you want and secure that deal. Maybe even sometimes not having to compete with a lot of buyers because the seller just wants to sell on a pocket listing, and we may have a pocket listing that, hey, we get you directly with the seller. Boom, you don't even have to compete with 20 other buyers in the market.
Yeah, 25% of the time, a year is that we represent the sellers and the buyers. Basically, what that means is that if I take 4 listings and one of the listings is perfect fit for one of the buyers that we're working with, that buyer will come and look at it before it even hits the market, and they ended up buying it without even hitting the market. Yeah, and so that's what you call an off market before it hits the market property. And so that's the great benefit that, you know, when you have someone like my son Matt and myself, it makes it very easy. So you get a lot of opportunities that way.
So partnering up is important. If you're interested in doing this, book a call with us. We'd love to set a time with you. I'll be there to help you guys. I do a first-time buyer 101 session, answering all your questions, kind of going over what we're going over today, and guide you to help you have success in today's market. And step number 2 is going to be get pre-approved for a loan. This is going to be one of the most crucial steps, getting qualified for a home loan. If you're looking to purchase the home cash, obviously you don't need to get a home loan, but majority of buyers here in Southern California don't have $800, $900, $1 million sitting around in their bank account. So the second step you want to do is go ahead and talk to a professional mortgage broker or lender. Now, we have a lender who could help you get qualified, and what that's ultimately going to do is he's going to tell you what your max price point qualification is. And on top of that, they'll also let you know what your monthly payment is and the total cash you'll need to purchase the home.
And the beautiful thing about that, guys, is that the same day, and the way we do it, the same day that we have the buyer presentation, when you come in, as long as you bring your taxes for the last 2 years, you bring in your most recent pay stub, you bring a bank statement, you bring a copy of your driver's license or ID, and
your W-2s.
The W-2s, you bring all the information. That same day, you're going to walk out knowing exactly how much you pre-qualify for.
And you'll get a pre-approval letter showing you, hey, congratulations, you're pre-approved up to $800,000 and all that good stuff.
Yeah, so you know, again, when you're getting ready to buy a house, start putting yourself in a position, meaning get your files in order. Have one file where you start putting in your taxes for the last 2 years. Have, you know, make sure that you put your most recent pay stub in there, the most recent bank statement in there, the stuff that you're gonna need to get ready to get qualified. That way, when you walk out of our meeting, you know exactly if you qualify, how much you qualify for. If you don't qualify, we're going to give you the solution, what needs to happen in order for you to qualify. Sometimes people don't realize that, but once we run the credit, because sometimes people will tell us, oh, I don't want to run my credit, which is perfectly fine. The problem with that is that if you wait till the last minute, then you run the credit, you discover that someone sent you a collection that you didn't even know about. Maybe you owed a bill that you didn't even was aware of, that you were aware of. And so that's the beauty about that. When you run the credit, we're going to take a look at in detail, what do you have on there? And that's going to help you and guide you and direct you as far as how much you truly qualify. That's very important.
Yeah. And I would say, look, there are some buyers, and I totally get it. Hey, I don't want to run my credit. I'm scared that my credit score is going to get hit. Totally understandable. What I do, even for some buyers, is I say, hey, let's just have a conversation with the lender. You know, just maybe the lender figures out what your income is, kind of what your debts are, kind of what you look like. They could get a profile for you and then say, okay, yeah, actually you seem like you could qualify for X amount. Now we have to run your credit. They're like, oh, okay, perfect. Let's go ahead and run the credit, right? They have that opportunity. Or other buyers where they're like, I already ran my credit. The great thing that you could do is that you could when you're shopping for a home loan, within, I believe it's 30 days, right? Is that correct? That they could shop for the best interest rate?
30 to 60 days.
30 to 60 days without having taken a big hit to your credit score. You're able to find what is the best rate. So that is an advantage for some buyers because they're like, hey, maybe your lender could provide a better rate. And normally our lender does. You know, just reach out to us. If you're looking to get qualified for a home loan, we could definitely help you get set up with that.
And the other thing is that the reason you want to get pre-approved and pre-qualified is that because a lot of times people don't know that if they co-sign for someone else, this actually affects them to buy a home. and they don't know that because like, oh, I was helping my brother out, I was helping my son out, I was helping my sister out, or someone in the family, you were helping them out as far as helping them co-sign. The problem is that when you run the credit, you're going to discover that's going to pop up in your credit. And what we want to do is we want to take a look at the debt ratio. We want to find out how much buying power you really have with everything that the banks are going to be looking at as far as like the lens, as far as what you actually qualify for. They're going to look at your income, they're going to look at your expenses, and that's what the debt ratio, the difference is going to help you qualify how much buying power you truly have. So that's why it's important to be able to run the credit and get that going.
Yeah, it's like going to the doctor, right? So sometimes when you go to the doctor, you figure out what you're working with, what your health looks like, and what you need to do maybe to get your health up. That same sense, in that finance, you figure out, okay, maybe if you don't qualify, the lender will tell you, okay, in order to qualify, you need to increase your income. You need to fix your credit report or your credit score, all that stuff to help you qualify.
Believe it or not, we recently worked with a client that they had a really low FICO score. It was like a 580.
540, yeah.
540, right? And so, this client wants to buy a house. Well, in order for them to get the best rate, they need to get that 540 to a 620.
620.
That's what
580 could be minimum, but 620 is better for the buyers. Yeah.
That's correct. I mean, you can still buy a house with a 580, believe it or not. But remember that your FICO score is going to determine a lot the interest rate you're going to get. Okay, so it's very crucial to know exactly where you stand when you're getting pre-approved and what does the FICO score look like, because that can make a difference between a 1% difference, a 0.5% difference in your interest rate, and that could make a difference in your payment.
Yeah, so once you've gotten your real estate agent, you've signed a buyer broker agreement to go ahead and work with an agent, and then you've gotten a pre-approval letter. And then the third step, the fun part is what we say, finding the home.
That's the best step. Really, finding a home is the best step.
Yes. Yeah.
I got to say that because finding a house is the best step. That's the fun part, guys. When you start going out there on the weekend looking at houses or the evenings, whenever you guys are available, that's what makes it very fun. But
yeah. So step number 3 is finding your home. That is the best step. That is a fun step because now you start to see what you like and what you don't like. And this is where buyers are like, oh, I didn't really care about a 2-car door garage. And then they get there and they're like, no, we actually need a 2-car door garage, right? I've seen it many times. I've seen it, or they'll tell me, oh yeah, I want a fixer-upper. And then they see these fixer-uppers and they're like, oh my gosh, never mind. This is too much work. I don't know what I'm doing. I'd rather just, buy a new home and I'm willing to pay X amount to be able to just move into my new home and have the satisfaction of having a new home.
It's always fun when you're going out there looking at houses, guys. Again, in 34 years, I had people tell me, Ramon, I don't want an alley. Okay. And then I remember one time I had a client and I went to preview this property and it was absolutely stunning, everything that they wanted. But guess what? It had an alley. And so I called my client right away and I said, hey, Maria, the house has everything that you want, because we had already looked at a couple of houses. So I already knew what they wanted. It has everything you want, except there's a problem. This one has an alley. And Maria, I remember our client told me, you know what, Ramon, let's just go look at it. We went to look at it and she fell in love. And I told her, are you okay with I don't care about the alley no more. The house just fell in love. Why? Because you as buyers, we're helping our buyers, you're going to buy on emotion. Yeah. That's why it's so fun when you're going out there. So don't limit that, but you do be flexible when you're looking at houses. That's the reason we say that, because when you're going to looking at houses, when you're out there shopping around, you're going to run into something that you're going to fall in love with and you're going to want to buy it on the spot.
And I've seen it multiple times where buyers walk in and then it's just that, you want that home feeling. You get there and it's definitely like, you walk in, you're like, oh man, this is the home. I for sure want to put an offer. And that's the exciting part. And just to recap, or just to let you guys know, there's 3 types of homes in the market. There are distressed homes, which stand for like real estate owned, bank owns, foreclosures, short sales, right? Those are homes where normally and this is a golden nugget for you as buyers. Normally the banks want a cash investor, someone who could close fast, 7 days, get it done with. And why? Because they want to get that asset off of their plates. They want to get their cash in and reinvest that money elsewhere. They normally don't want to get buyers. So I get buyers who are like, I want foreclosures, I want short sales. I'm like, well, I want to let you know you're going up against investors who are willing to put 20, 50, 100,000 above the list price type of thing.
Yeah, and they can get those, but the problem is with those types of houses, just so you guys know that, a lot of times those are already, they need a lot of work. Yeah. And unfortunately, some of these houses don't have the proper kitchen. I just went this morning. There was a bathroom was completely flooded. It wasn't working. The plumbing is not working. So if the property is that bad, then it won't qualify for financing, especially if you're looking into a first-time buyer program. So we gotta switch into a different program if that's the case. So just so you be aware of the distressed properties that some of those don't qualify for financing.
Yeah, and there is, just so you buyers know, there is a loan called the 203K loan, the FHA 203K loan. This is the rehab loan that everybody talks about. Now, the thing about this is most buyers don't know, but this is a long drawn out process. It could take up to 6 months, even up to a year until you get all the funds needed to replace or rehab your home, because the lender won't give you all the money up front. They'll give it to you in phases, and they have to have a general contractor who's licensed with the 203K loan to make sure that they're completed.
The way it works with the 203K program is because we sold every year, we probably sell 1 or 2 houses using that 203K program. And the way it works is it's about a 90-day escrow. It's not a short escrow. It's not a 30-day. It's going to take a little bit longer because we got to get the contractor involved, and then we got to get the person in charge of the 203K program. They assign a person, and he's almost like a project manager.
Yeah.
His responsibility is to meet the contractors and to go through every number. So it's very tedious. It's very tedious when we're dealing with that. However, it is a great program.
Yeah.
Remember the program the client that we sold them the house. The house needed about $50,000, maybe $75,000 worth of work, but they got a great deal, and they were in love that they were able to buy that house that they wanted.
Yeah.
Okay, so it does take longer. It takes you to
the rehab. The escrow process, like you said, 90. It's a longer process. That's what sways sellers away from it, because they want to get their money quick.
Yeah, because you're not going to want to finance everything. Sometimes the property might need $100,000, but you only qualify to get $50,000 or $75,000, and the lender will give you that money at the closing. At the closing, they're not going to give you the money. They're going to leave that money in the escrow account, and then you have to go. The contractor's got to fix it, and it's in phases. Once they fix it, then they release some of the money until we finally release all the money until the project is completely done. That's what you were saying. It could take a year. 6 months, a year, or something like that. Right?
Yeah, and then the second type of home are probates and trust sales. Those are other sales. A probate is when someone died in the property, they didn't have a trust, and then it goes to court. The other one, the living trust, is the opposite of that, when they have a trust, and now it's just almost like a standard sale. And then the third, 95% of the market is just a standard regular sell. Hey, someone's, all the kids moved out, empty nesters, or someone's getting a divorce. They need to sell. they need to get out of the property. Things like that.
Or if they're Mexicans like us, we multiply so fast.
Yeah, exactly. Yeah.
That's the truth.
Yeah, exactly.
You know what I'm saying? I started with 1 kid. The next thing you know, boom, I got 4 kids.
And you
right?
need five bedrooms.
Yeah, so you start with a 2-bedroom house, and next thing you know, being a Mexican like myself, man, we multiply so fast. I tell people all the time, man, we go fast, right? So we need a bigger house. Yeah. So we have to upgrade. Right?
Yeah, exactly.
That's a regular sale.
Yeah. So, and then step number 4 is going to be submitting an offer. Now, when it comes down to submitting an offer and negotiating, this is what we call the hardest step. Why? Now you're competing head to head against other buyers. And there's going to be a couple things that the seller's going to look at. First, they're going to look at, what are your contingency timeframes? What is a contingency? Now, there are 3 major contingencies that buyers have to protect them when they're buying a home. For instance, the first one's going to be an inspection contingency. This is where you see and go to the house and do a general home inspection. You want to check the roof, the foundation, the plumbing, the electrical. You want to make sure everything's good. Now, let's just say you find out that the roof is falling apart. It only has 1 year left and it's $25,000. At that point, you could A, ask the seller to repair the roof or give you a credit, or B, if you decide, hey, they don't work with you, that's where you could back out of the deal, and you could say, hey, look, I put a security deposit of $10,000. That is fully refundable to you because you have not removed the contingency of the inspection.
Yeah, and the only thing that people got to pay attention when you're doing the inspection, what we're talking about right now, the physical inspection, is that there's everything in that report, guys, everything that's going to come out there. You're talking about the little plug, electrical outlets, the little light that was broken, the light bulb that's not working. So everything's going to come up in that report. Yeah. And most of the transactions is where they fall apart in the physical inspection period. Yeah. So that's why it's important to get it done. The regular contract right now is a say 17 days is what the normal standard it has. But a lot of times, when I'm representing the sellers, we negotiate that and we tell the buyers, hey, get that done in 10 days or get it done in 7 days. So you got to be aware of that. So you got to be prepared for that. That right there, you won't get that money back. Let's just say you are in escrow and we do the inspection. It's going to cost you $400, $300, $500, depending on the property. But that money you don't get back. That's the money that you will invest to find out exactly what are you buying. You want to know exactly what you're buying. You know what I mean? So that's the importance of having a physical inspection.
Exactly. And when it comes down to partnering with a real estate professional, the main thing is you're going to have to sign what is called a buyer broker agreement. This is something
BRBC.
Yeah, this is not new. It's probably new to some other agents because within the last year now, throughout the United States, now buyers are obligated or have an obligation to pay the buyer's broker commission, which would be myself.
That's correct.
Now, what we do and what we've been successful with all my clients this year, actually 100% of my clients, I've been able to negotiate the seller to go ahead and pay my commission and cover my commission. So that way my buyers don't have to pay anything out of pocket.
Well, sometimes they don't want to pay you the whole thing though.
There are some instances where the sellers don't want to pay everything. Now we aim to get a 3% commission, and obviously this is negotiable. We work with our buyers to help them achieve their dream. But let's just say the seller doesn't want to pay the full amount. When that happens, then we go to the buyer and say, hey, are you willing to pay the difference, and cover that difference? That way we can get our commission. And a lot of our buyers have been saying yes. Yeah,
that's correct. Yeah. Sometimes they don't, but it's just part of the game.
Yeah, it's part of the game.
It's individual. Every property is a little bit different. But if the property is a great property, it's a good property, they're not going to kill a deal for paying the extra 0.5%, 1%, whatever the number is.
Right.
Okay.
Right. And at that point, that's where you'll sign a buyer broker agreement. And the main reason for a buyer broker agreement is to make sure that you get your representation, right? I, as your buyer's agent, can go ahead and speak on your behalf, act as your fiduciary, and disclose everything I find out about the property to protect you in the purchase. And when you're making an offer, this is what I always tell my buyers. In our market today, you have to submit at least 5 offers to get 1 deal. So just remember that. This is a little secret nugget that a lot of buyers don't know. They sometimes get scared. I don't want to submit an offer. You can submit as many offers as you want. It's just a matter of getting your offer accepted. And what I'm seeing in my market, with our market, is about 5 offers to getting 1 deal. Actually, I'm in escrow right now. It was the 5th offer that they got their offer accepted. And they were like, oh my gosh, you were right. That was exactly on point. And we showed about, I would say 20 homes, give or take, so about 4 showings. So, if you're actively showing for property, you're interested, motivated, highly motivated, showing properties, looking online, sending it to your agent, what I do is I go ahead and pull up all the private remarks, everything for you guys, and I talk to the agent to see, hey, what price do we need to be? What do the contingency timeframes need to be? If it needs to be 3 weeks or 2 weeks or even 10 days, how can we submit a competitive offer? That's my job.
And the beautiful thing about that, guys, is once you have a BRBC, buyer broker agreement signed with the agent, right, then it gives you the right to just go to any open house and you don't have to give them none of your information. Because a lot of times when you go to these open houses, the agents are asking you, fill this out, give me your email, give me your phone number, give me your contact, give me all the information, and you just don't want to have all your info. You want to be private about that. So the beauty about that is once you have a buyer broker agreement, you can just let them know, I already have an agent. You can just carry the business card. So I already have a buyer broker agreement with this agent. He's our agent. He's representing us.
Yeah, and you could what my buyers do, they just write my name and my phone number down. That's when they sign it. Hey,
that's the best way to do it.
My agent. Yeah,
correct.
Exactly. And that's the 4th step. The step number 5 is going to be, boom, you got your offer accepted. Congratulations. Now you're in what is called escrow. Escrow is a 30-day period of when all the files are being, confirmed, reviewed, making sure that everything is done the right way. And then this is the time where you do inspections, you make sure your loan is fully approved, you do the appraisal, make sure the house is actually worth the value. And this is going to be the most important part because this is where you make sure that, hey, this is the home that you're buying. You're putting the money down, you do everything like that.
Yeah, when you're under contract, guys, once we go into under contract, that's the most tedious part of the transaction because that's the bulk of the time. If we have a 45-day escrow, you're probably looking at 30 days of just being under contract, everything being done from contingency removal to the appraisal contingency removal, making sure the property appraises, to the physical inspection on the property. And then there's problems that are going to come up. Yeah. And so that's why that's our job. When the problems do come up, our number one job always is to be a problem solver. Find the solution to the problem.
Yeah.
That's where we become the quarterback and making sure that everything goes well. And there's going to be problems. It's never been the same transaction in my 34 years, and I've sold over 1,000 houses in my 34 years of selling real estate. But there's always problems that come up, and not one transaction is identical. They're all different, every single one.
Yeah, totally. I totally agree. Everyone has a story, right? You have a story, right? It's just a matter of going out there, submitting that offer, getting into escrow, and then that's the fun part, challenging part, right? Type of thing.
Oh yeah. Some of the problems I had, like rebuild letters. People don't know about that. Like, what does that mean? What is a rebuild letter? Well, a rebuild letter basically is if I sell a house. I sold a house recently. I was a couple of houses, one in Linwood, one in Compton, and the same thing happened. The lender sent us what they requested, a rebuild letter. Why a rebuild letter? Well, if the property is located near industrial zone or near commercial zone, they want to make sure that if that house burns down, that the buyer is able to rebuild it. That's called a rebuild letter. And that rebuild letter can take anywhere from 1 week to 4 weeks just to get it back from the city. And then that letter is going to confirm, can they rebuild the same property back up again? Because if the rebuild letter comes back and they decline it and they says you cannot build all over another house here, that automatically the loan gets disqualified. The lender will not approve it, and they will say deny the loan, so you can't buy this property.
Wow.
So that's one of the problems.
Yeah, that's crazy.
On the seller side that I've dealt what I dealt with working with the buyers on.
Yeah, and there's so many things like pre-sale inspections. Even appraisal issues. If the home, for example, if a home comes in below the value that you submitted an offer for, what do? Right? You could ask the seller to reduce the price, ask for a reduction, maybe meet them halfway, or in that case, if they don't, you could back out of the deal, right?
Talking about pre-sale, I recently sold another property, pre-sale, same thing. It's in the city of Linwood, okay, and the sellers have changed all the windows on this property. Well, they didn't pull a pre-sale; they did pre-sale afterwards. Well, when we did the pre-sale, guess what? The inspector called the windows. Like, hey, those windows right there do not fit the code that needs to have the right code for that property. So guess what? Now I had to get my contractor out there, and we had to move it 2 inches. Believe it or not, 2 inches. For 2 inches, they made a big stink about that.
Wow.
And so guess what? It cost the seller money. We have to spend money to move them 2 inches up. And so, if we're going to have a pre-sale inspection on a property, we got to make sure we order that right away, because that could take anywhere from a week to 3 weeks to get a pre-sale done.
Yeah. So, and just to recap, when you're in escrow and you're under contract, the first thing you're going to do is submit what is called the earnest money deposit. This is like the security deposit.
EMD.
About $10,000 to $15,000, or about 2% of the purchase price. This is what, just showing in good faith, hey, to the seller, you are a serious buyer, you have the cash, you could buy the home. The step after that is going to go ahead and do the physical inspection. This is where you check the roof, the foundation, electrical, and all that stuff. If you find anything that you're concerned about, you could submit what is called a request for repairs to the seller. You ask them to repair the items, or what we tell them is, hey, normally the best thing is to ask for a credit, because the seller might do a Mickey Mouse job and then it's not the way you like it, but hey, they completed it, right? So we always ask for a credit, so that way they could take the cash to buyers and they could use the money to do whatever they want.
So once we get to that point where the physical inspection has been negotiated between the buyer and the seller, and everybody's agreed on it, they remove that contingency. That means that no longer, they don't want to know, they can't cancel the deal because of that physical inspection. Right. Once we remove that.
Right.
The second thing is the appraisal. By that time, we already have the appraisal back in. We got to know if the appraisal came in or not. Once we know the appraisal come in, we can remove that contingency, and the final one is the loan. That's usually the last one that gets removed, because we're going to make sure from the buyers that the buyer is fully approved by the underwriter. The underwriter has already given a seal, approval, ready to go. All we need to do is clear to close. So once we're done with that, being under contract, we move to phase number 6.
Then you get to phase number 6. This is before closing escrow. There's really 2 major steps. The first step is going to be, you're going to get loan docs, is what you'll hear. You probably heard this, but loan docs, what it is essentially documents from the loan saying, hey, you're pretty much approved. You got to go sign it and make sure that, hey, you're agreeing to all the documents of the loan, all the agreements of the loan, and then you're getting ready to basically put all the cash that you have to close the deal, the down payment and the closing costs, right?
So be ready for that, because when you're going to sign loan docs, guys, really honestly, it's like a big book.
Okay. Yeah. Yep.
I mean, you're talking about, I mean, you're going to meet the notary and you're going to get all that paperwork signed. But it is, I mean, you're talking about a lot of paperwork. Okay. So that's when the loan docs are going to be signed.
Exactly. And it's a nervous time, but it's also a fun, exciting time because you're almost there. You're just a couple days, probably a week away from closing, maybe even less, right? A couple days.
The same day we do the loan doc signing, that's when they're going to find out they're going to just confirm. They're going to confirm the payment that you agreed on, the principal, the interest, the taxes, the insurance, all of the fees. They're going to give you the exact amount that now you need to bring into escrow, which is the final before we close. You got to bring in, you got to wire transfer the money and get ready to close it before they fund the loan.
Yeah, and that goes into the next part, which is funding the deal and recording. The first step that happens is when they say, hey, congratulations, you funded the deal, that means they put all the cash. The lenders basically put in, let's say if you're buying $700,000 home, they're putting the $700,000 in escrow for you to close the deal for the seller, right?
It is a wire transfer. So once you sign loan docs, you bring in your money, the escrow confirms that everything's ready to go. She gives the blessing to the lender. The lender says, okay, we're going to fund it. That's what that means. When you hear that word funding, that means that the bank that you got approved with has released all of their money to the escrow company or to the title company.
Yeah. And then here in LA County, it takes another day to finally record. And that is the day your name gets officially recorded on the deed of the title.
That's step number
And that's 7. Step number 7, right? Closing day, right? Step number 7 would be closing day. And that's where it leads us into, hey, congratulations, your name has been recorded on the deed. And now you're officially the homeowner. Time to pop the champagne, get the keys, have a celebration with the family, right? And that's the fun step.
Yeah, the fun part right there is once we get the closing. By the time that we do the closing, guys, that means that you already did the walkthrough. Because remember, you got to do a walkthrough before we close, right? When we get loan docs and we're ready to close it, that's the same time you're going to be calling the buyers and say, hey, we need to meet at the property. We got to do a final inspection, final walkthrough, make sure that everything is exactly the same as when you originally went into contract.
That's right.
Right? So
that's right. You want to make sure that there's no holes in the wall when the seller moved out the couch, or they didn't dash the walls. I actually just had our escrow recently where they fixed a wall, but the nail went straight through the wall and broke the outside of the house exterior stucco, blew a hole in the wall. And so what do you do, right? In that case, we hold escrow. We tell them, whoa, referee, stop the funding. Don't close this deal. We're not moving until the seller fixes this. And that's what you could do, right? That's some buyers ask me, hey, what happens if they make it damage? That's what happens. We hold escrow until they fix the repair. And sure enough, they had to fix it. They had to bring it back to its original condition when they purchased the home.
And what we like to do the day that we do the walkthrough is the day that we do picture day.
Yeah.
You know what I'm saying? We always tell our clients, right? We tell our clients, hey, get ready, come ready, bring the family, bring the kids, bring everybody that's going to be part of that house.
Yeah.
Because we want to take some pictures on the outside as a memory so that you can remember for years to come. Because in my 34 years, I got clients that originally they still have their house already paid off, but 34 years ago, I sold them their first home many years ago. Wow. And they still got that picture of what we took them many years ago. Oh yeah,
that's
fun.
Awesome.
That's the fun part, right? Yeah. So that's pretty much it. That's pretty much it. That's where we're at.
And that's pretty much, those are the 7 major steps from first partnering up with an agent all the way to getting your keys on closing day.
Hey, for those of you that are still here watching, here it is, the golden nugget.
Yeah, the golden nugget. We get a lot of questions throughout the years. Sometimes buyers waiting on the sideline. Do I jump in?
Do I buy?
Do I not? Do I buy? Is it the right time? Can I time the market? What do I do? Well,
and we can never really time the market, guys. In my experience of selling real estate for so many years, I've seen it with a lot of clients, and a lot of clients have told me, Ramon, I'm going to wait because the rate is high. I want it for it to come down, or I think the market is going to go down, and they sit on the fence and they wait. The problem with that, with waiting is that if you wait a year, and I've seen it, if you wait a year, well, you could have gotten 5% of your property. If you bought a property for $500,000, I'm using a low number of 500. But 5% of 500, 5% of $500,000, how much is that?
That's $25,000.
25 grand. Yeah. That's in 1 year. Well, sometimes the property has gone up double digits to 10%. That's 50 grand that you could have actually gained an equity for sitting there waiting. yes, you're right. I mean, sometimes people want to wait for a better rate, but the truth be known, I've seen it over and over. People buy at a higher rate. I mean, I was selling houses back in the 90s when they were 8-9%. Right, a couple of years later or 6 months later, when the market dropped, 2% difference to 6%, they refinanced. But guess what? They kept all that equity.
Yeah.
You see, that's the beauty about that.
Yeah,
that's
we saw that even in COVID. We have a lot of buyers who were like, "Oh, we were going to buy in 2019." And we wish we bought in 2019 because now a year later, the rates would have dropped significantly, right? And they would have locked in a good rate and had the home they want without having to compete in 2020 with all of the competition, right?
So the golden nugget basically, guys, is don't wait, right? Don't wait for that, because if you might lose 10, 20, 30, 50,000 of equity money that, it's really challenging for people nowadays to save 10,000, 20, much less forget 100,000.
Yeah.
You know what I'm saying? So people don't have that kind of money. We don't have it. This is not that easy. So, that's the golden nugget there. Don't wait. Just pull the trigger, get the house. You're either going to buy the house and make the money, or you're going to pay somebody else's equity. You're basically helping out your landlord. You're paying their mortgage and you're helping them build their wealth.
Yeah.
I would say build your own wealth.
Yeah, 100%. And sometimes we even get buyers talking about, oh, what if I buy down the interest rate, right? And you can. This is actually a part of the golden nugget. You could buy down the interest rate, right? Sometimes 1 to 2 points. What that means is 1% of the purchase price or the loan amount, right? Let's say
700,000.
700,000.
1% is
7,000, right? And that only reduces your interest rate by what? 1/4%.
A 1/4%, which
maybe
is
even less.
$75.
Yeah, and obviously we talk to a lender to confirm everything, but what from our experience we're telling you guys, right? I mean, this is something that you spend $14,000, maybe even $25,000 to get your monthly payment to reduce by $400. Now, if you're there at the house for 30 years, yes, then that's beneficial. But what we've seen in the market, that most buyers, they buy their home and then in 5 to 10 years, they're thinking, hey, I got to sell this home. I actually need a bigger house. We got more kids, or we need to move out the area, or whatever. By that time, you've already built equity, right? And you spent $25,000 and putting down the rate, but now you're leaving, right? So the best thing we've seen is buyers who bought, like in this case, 2019. Then they refinance in 2020 where the rates are better, right? I don't know if we'll ever see those rates in 2020 again.
We don't know.
We don't know.
Hey, listen, we're praying.
yeah, we're praying for those.
We're praying, Lord, drop the rates.
Yeah, exactly.
But but you're right. We just don't know. The best thing to do is if you're ready, you're committed, you want to get into a house, get into your first home now. A couple of years, we've seen that the average it's already a statistic that every 7 years people move. All right. So that's what we have seen. Every 7 years, people are ready to move for whatever reason. Financially, they get better. People are usually making more money. So and they're expanding, the family's growing, and they want to move into a better neighborhood, a better house, a better situation for themselves.
So what we recommend is reach out to us. See if you can get qualified. It doesn't cost anything to get a qualification. My buyer presentation is completely free to answer all your questions, help you get guided in the right direction. Would love to help and meet you guys, and reach out to us, because maybe you don't know if you qualify or not. Right? Maybe you do qualify and you're like, oh my gosh, I did not know I qualified. Now I can go buy a home.
We had a couple of people like that. They called us. They were like, well, I'm not sure if I can qualify, but I would like to take a look at it. They come in, they're shocked. They're like, whoa, I didn't know I could buy a house.
I can buy it $1 million.
They do qualify, you know what I mean? Because they don't have a lot of bills. They don't have a lot of expenses. Just remember that, everything. If you're having a lot of car payments, that makes it really tough. If you co-sign for a lot of people, that makes it really tough. But a lot of times people don't know that, and so they end up doing the wrong thing. Eventually they do the right thing. But if you end up buying a car right before you buy a house, well, that's going to work against you. But at least if you don't know, reach out to us. We'll sit down with you and we'll create a game plan for you and to help you set you up for success and to be a homeowner, which is what everybody wants.
100%. So like we said, if you're looking to move in the next 30 days, 90 days, or even 9 years, just reach out to us. We can help guide you in the right direction. Everything's in the description down below. You could even book a call with us, or a Calendly link. It's in the description. You could book a direct call with us, or even myself, and just reach out to me. Our phone number is there as well, so that way we could help you, guide you in the right direction. And even if you don't qualify, better for you, because now you know how much income you need to target. You need to know what your credit score needs to be like, and we just get you started in the right direction. It's like going to the doctors, right? Now you get a baseline of where you're at and what you need to do. You need to work out, you need to eat healthier, whatever. We do that in real estate for all of our clients and put a game plan together for you. So that way you could have success in today's market. And there you have it, guys. Those are the 7 steps to helping you buy your first home from A to Z, what you need to do. Of course, you can always reach out to us. Again, my name is Matthew Sanchez.
Ramon Sanchez. We're here to help you, to serve you, to take good care of you.
Yeah. So, like I said, if you're looking to move in the next 30 days or even 90 days or however much time, reach out to us. We're here to help you. And don't forget that golden nugget, guys. We can help any way we can.
You'd be surprised. You'll be surprised.
Yeah.
And if you know who we are, Google Ramon Sanchez and Matt Sanchez Real Estate Group. You'll see all our reviews and read what the people are saying about our services.
Yeah. We'd love to help you make your next move and get you started in the right direction.
Hey guys, so thank you so much for watching the video, guys. I hope that you guys got a lot of good information. Please don't forget to subscribe, to hit the like button, and hit notifications, because we're here to make real estate real. Yeah, boy.